Yahoo Finance is into hating on the real estate market, and further, CBS News is blaming people that should be hated. What is with the intense emotions in the real estate press? Unbelievable. I guess we have nothing else to write. Start making up stories. I'm Bill Gross. This is my weekly real estate market update. We review the market, and I try to focus on the statistics and the data to help you know what's happening in the market. Before we get into the hate, let's talk about where the market is and make sure we know exactly what's going on. So when we look at the market, I always say there's two things. There's in economy, there's supply and demand, basic economics. The supply side is inventory, sellers, how many houses are available for sale. And the demand side are buyers, and that's most clearly indicated by mortgage rates. Let's take a look at those numbers to understand where we are. On the buy side, the demand side, rates this week ended up at 7.22%. Now they've been between 7% all month since all August and the beginning of September. They've been flirting with all year long between 6 and 7. And then in July, bumped above and stayed there, and it stayed in the 7.25%, 7.3% rate. Now, these rates are a little higher than before, but we still have enough buyer demand based on what I'm seeing to keep the market going strong. But it's starting to affect things, and we'll take a look at that in a little more detail. On the seller side, on the supply side, we still have record low inventory. The inventory today is lower than at any time in history. It's below the 2 pandemic years, and it's about half the rate of the pre-pandemic period. So as long as there are not enough houses to sell, prices can't go down overall. There'll be pockets where prices go down. We'll talk about that. But overall, the market prices can't go down. Now, that's looking at the real estate market at a national level. How about at a local level like Los Angeles? In LA, one of the great indicators I use is Altos Research, and they give a qualitative number of the market of 43, same as last week. It's been all year 43, 44, 43. And that means that it's slightly into the seller market side. It's not a strong seller market like we had a year or two ago. One of the key factors I watch, because they cover so many metrics, is the median price per square foot. And that's staying at $828, and that's been pretty steady for the last few weeks. That means what does the cost for an average square foot of home? And that stayed around $828 per square foot. So as long as that stays about the same, the housing markets are good. Now, on the bad news, we can see that the rise in rates are affecting the number of buyers. Now, some of those buyers are also sellers. That's why they're not selling. And some of those buyers can't buy houses because sellers won't sell. If rates go too high, the seller can't afford to buy a house on the buy side. But that said, the statistics are showing now that U.S. home purchase applications have fallen to their lowest level since 1995. And so this doesn't mean that there's not necessarily buyers. These are buyers who are getting ready to buy. So this is a kind of a forward-looking statistic of 2 or 3 months, but it does indicate that there's been a significant decline in buyer interest overall, and that's why the number of home sales has dropped, not the prices, but the number of home sales has dropped so tremendously. So this is a real factor where the rates are squeezing out buyers regularly. On the positive side, not in Los Angeles, but nationally, is new home building. Because with the decline in inventory, home builders are going to re-enter the market. Home building is about a 10-year investment. You buy the land, you entitle the land, you start building the houses, and then you sell them. And so it's a long-term, and the home builder has been burnt over the last 10, 20 years. And so now we see the nation's largest home builder, KB Homes, saying that inventory is so scarce that builders will be able to build, they think, for the next 10 years, which means they can go out and buy land, get it entitled, and start making the large projects that they make money on. I think that's a good sign in many states. It's certainly a good sign in states where people are moving to. And unfortunately, it documents the problem we have in California, where we're not building new homes. We're just building apartments, and we're building homeless shelters, but we're not really building more stock for people who want to live here and work here. Now, another interesting sideline on the market, and I think this is an interesting summary, the phrase he used, that this particular Housing Wire economist, and what's his name again? I lost it, I'm sorry. Logan Modassami. He says that the market is a very savagely unhealthy housing market. And I would say that's true. In fact, I would say overall, the economy isn't healthy, meaning I find less inventory from retail stores. I find prices going up. I find the quantity of product you buy going down. I find here in LA, the retail stores have less staff to help. We have less new stores opening, more stores closing. So in a lot of ways, we have an unhealthy retail market, and the same is true in housing. It's very unhealthy in that rates are going up, inventory is still very tight, and that in the long run doesn't create a healthy opportunity for buyers and sellers to exchange the market. Now, when you look at the market nationally, it's pretty healthy, but there are pockets that are really doing very poorly. One of the worst pockets is in Northern California and San Francisco. 1 in 8 San Francisco home sellers is losing money to get out of town. That's a high number. If you look at this chart, it shows nationally about 3% of home sellers lose money, and that number's been coming down over the last few years. Whereas you can see that 12.3% in San Francisco, they're just anxious to sell the house to get out of there. And if you look at overall all the other cities, for the most part, people are, a small percentage of people are selling at a loss. And the highest would be San Francisco. And we'll go down there and find those numbers. There we are. 12.3% of them, 1 in 8. And the average one lost about $100,000. Now, overall, the average home seller in San Francisco, if you take 8 of 8, pocketed a $625,000 profit. But of that, there was a group that lost money, and they lost about $100,000 per house just to get out of town. Now, obviously, if you're relocating, if you have 2 jobs, it's not that big a deal. Maybe you can afford to move out. But for most people, that's a pretty bad hardship. Now, that's San Francisco, where they're shutting down retail stores. Stores are moving out. Offices are moving out. There's all kinds of populations moving out. And that's true in a couple other areas where there is adjustments. We had a big run-up in prices, say in Austin, Texas, and now there's an adjustment in prices. But in San Francisco, you literally have people moving out. That's definitely going to be a problem. One of the things, if you follow my weekly newsletter, or this video, you'll know that I usually take to task Zillow. I was always so excited when Zillow came into business. They were such a great source of information when they started. They were data focused, and their thesis was to empower buyers by making the market more transparent with data. And they left that years ago to become an advertising company. And I think that the glow of their name has lasted longer than it should. Take a look at their last 3 press releases. Protect what you love. Renters can get rental insurance. So now Zillow's selling renter insurance. That doesn't help home buyers. Obviously, it helps investors compete with home buyers. And then 80% consider climate risk, which I talked about that a couple weeks ago. I think that's nonsense. I don't think buyers really pay attention to that when they buy a home. And then Zillow Home Loans. So now they're in the mortgage business. So, again, they're not helping home buyers. They're trying to make more money on home buyers by, and I talked about all these articles. The home loans, it's a pilot program is starting. It's only available in Arizona. They advertise it nationally to get people to click on the website, but you can't get that loan outside of certain markets in Arizona. So Zillow's really moved away from information that helps home buyers to really just being an advertising company that's putting out clickbait to get people to participate on the website on a regular basis. Speaking of clickbait, one of the worst offenders this week is CNBC. Now, you might remember this topic, mortgage rates tipping point. Homeowners say roughly 5% is the magic number to move. And I previously discussed this concept because I call BS. There's no magic number. At each drop in rates, we're at 7.25 today. At 7, there's more buyers. At 7.5, there's less. As it drops, more buyers come in, buyers come in. There's no magic number where all the buyers are sitting at home and one day, hey, honey, rates are 5%, let's buy a house. It doesn't work that way. It's just complete nonsense. But even worse than that is this number at 5% is based on a study from, what's the name of these guys? John Burns, Research and Consulting. But what they don't tell you is that report, I have it, came out in April. Now, and they also said 5.5 is the magic rate, not 5%. So but then you have in their subtitle, 5.5% is the magic number. So first off, it's 5.5 on the report, number one. Number two, there's no magic number. It's just nonsense. Anybody who's in real estate knows. It just doesn't work that way. There's no clarion that goes out the day rates hit 5.5% to tell people it's time to move. But more than that is they're giving you information today when rates are 7.25. This report came out when rates were 6.5 or 6.25. So 5.5 was the magic number back in April. Is 6.5 the new magic number now? Right? CNN's not going to tell you that. The truth is, there's no magic number. There's no magic bullet. The whole thing is just, I think, nonsense. But worse than nonsense, I think, is when news seeks to distract people emotionally with negative emotions. And this week there's two offenders. One is Yahoo Finance. And their headline is, Americans really hate the idea of buying a house right now. Now, first off, I'm not an editor, but if I was, I would ask, what's the difference between Americans hate the idea and Americans really hate the idea? Like, where is that statistical measurement that differentiates between the two? And what do they base that on? Do they say, do you hate buying a house now, yes or no? No, they didn't do that. They're quoting a survey that Fannie Mae did of how many people say it's a good time to buy versus a bad time. Now, look, if you got laid off, it's a bad time to buy. Maybe if you just got divorced and you spent a lot of money on legal fees and settlements, it might be a bad time to buy. Maybe if you just had a couple kids, it's a bad time to buy because you're too busy and don't have the time to look into it. I don't really know. If you just bought a house last year, it's probably a bad time to buy. There's a lot of reasons why it's a bad time to buy. It's not that you hate buying a house, it's just a bad time to buy. But Yahoo took that survey and put it into, they hate the idea of buying a home, number one. That's ridiculous. It has nothing to do with it. The survey says nothing about hate. Number two, it's really insulting to say that because the majority of people don't want to buy, that's a bad time to buy. Because there's 131 million households in America. And in a great record year, only about 5.5 million would buy a house. This year, maybe just under 5. So about 4%, less than 4%, would buy every year. That means every year, 96% not just think it's a bad time to buy, 96% don't buy. That's even worse. That's more dramatic. 96% of Americans won't buy a house next year. That's a fact. But to say 82% say it's a bad time to buy, and from that to say they hate the idea, really, I just wish I understood what was the psychology. I mean, these people, Yahoo's worth billions of dollars. I don't understand how that works. Worse than that, I think, is CBS News. Now, if you follow the news, one of the distractions is always get somebody mad at somebody else, right? You can't just be mad at the market. You can't be mad at the rates. You can't be mad at the economy. Who do you hate, right? Blame somebody. So CBS News this week, they came up with somebody, blame the boomers. Hey, I'm a boomer. I take offense to that. Why is the current housing market so expensive? Blame the boomers, one economist says. He is not saying make more money and buy a house. He's not saying cut expenses and save money and buy a house. No. Blame the boomers. And why? When you read the article, it's because boomers are living longer than their parents did and their grandparents. Isn't that a good thing? Boomers are getting divorced and both sides are keeping houses or buying houses. So people should get divorced and rent houses to let the next generation have it more cheaply. And then they're dying, but they're giving houses and they're staying in the families. So all those are reasons that, I don't know, make sense, but why would you blame boomers? The reality is we have demographic changes. There's less households being formed. Instead of, with marriage rates dropping dramatically, instead of a man and a woman living in one house or a man and their spouse in one house, you have two different households buying independently. Single people, we had Zillow complaining that single women were being discriminated against previously. Presumably they want more of them to buy houses. Well, if you have single man and single woman buying a house, that's 2 versus getting married buying 1. And so, but again, what's the point of the hate? Why blame anybody? Why not challenge people? Hey, it's the American dream. Everybody wants to come to America and own a house. You can't do that in so many countries. And increasingly, I believe that Americans are being distracted, and certainly here in California, and we're losing the opportunity. We're giving away too much power where less homes are being built, and the laws are working increasingly against us being able to buy the houses that we want to live in. So no reason to hate. The market is solid. If you want to buy a home, great time to do it, a little less competition. If you want to sell a house, you better have your plan together to make sure that you're able to get the results that you want. If I can help you, reach out. Call me, text me, email me. If you like this material, please like it and subscribe. Any way I can help you, reach out. My name is Bill Gross. I'm at Bill Gross Probate all over social media. And as always, make today your best day ever. Thanks so much.